Unbelievable times. Coming to you live from northern Israel, where I talk about things. Um, so, what's happening in the Bitcoin and crypto markets? Well, if you've been looking at the charts at all this week, intraday, they've been moving along very nicely with the VEPs, as you hopefully will have noticed. The VEPs have been very good at indicating where the assets were going to go, and the assets have been doing that. We saw some very nice pumps on Kronos, and obviously it hits a number of targets on different time frames, and it is not every day you see an asset smash up the third band to the upside on the daily time frame. The third band to the upside of the RMLR is like the 1110 and the 3012. And when you see an asset do that and it's gone up more than 100%, I think it was like 145% or something like that, over a matter of a couple of days, 2-3 days, that's telling you to take your profits. Okay. And when you look at the 4 hour, also it hit those bands and entered mean reversion and was screaming take profits a good number of candles ago already. And the 4 hour, for example, remains in mean reversion to the 3012 RMLR. It did complete the mean reversion already to the 1110 RMLR, but the 3012, it remains in mean reversion to it. At least the last I looked at it, which was maybe 15 minutes ago, when the mean reversion was down, like the mean that it would revert to is currently down at around 23 cents. Hello, little doggy. Hello, buddy. Hello. What a cute doggy. Hey, doggy. I love dogs. And yes, I miss mine. My amazing, lovable dog Q, who unfortunately passed away not long ago. He was a great St. Bernard. Anyway, um, so Kronos was definitely a very good place to take profit when it hit that high, whatever it was, 34 cents or something like that. And to people saying, "Oh, that was because of the Trump news, the Trump media group have formed a partnership with Kronos, and that's why I pumped." No, actually, if you look at when the news was announced, like the most recent, round of it, which is, around the time, not exactly, but around the time that it started making the big move, it actually had been moving up on the VEPs for a while, for a number of days before. If you look at it, it just hadn't been spiking up. But if you look at the overall VEPs, it was moving up, and the probabilities were heading, more towards that probability towards the upside. By the way, it could just as easily have gone to the downside if more people had decided to sell. They say, what is it? They say, buy the hype, sell the news, right? So if traditional TA traders had bought the hype and then sold like the teasers suggesting that there might be some kind of a partnership with Kronos and somebody, or who knows what, Kronos had something in the pot that they weren't revealing, and they were getting everyone teased and excited about it, which happens all the time in crypto, by the way, but also in any asset class. And then the news, by definition, would be a sell the news event, right? If you believe in that kind of thing. Clearly, I don't, because news is ridiculous. News is a lagging indicator. In terms of using it for trading, it's ridiculous. You can't. You're using old information to make decisions about the market now. That's completely useless. You don't need old information to make decisions about the market now. You need the current information that tells you what is happening now and what is likely to happen in the future. That's what you need. You don't get that by reading old news. And anything that you see, quote unquote, in the news is old news by definition. By the time it gets to you, it's already old news. It's already happened. It's already been transmitted to a reporter who had to gather the information, compile it, summarize it, report it, submit it to an editor who had to review it, QA it, spell check it, grammar check it, make sure that all the content was correct. If there's anything missing, or incorrect, he had to send it back to the reporter saying, hey, please make these edits or fix this stuff before I can go any further. Then the reporter sends it back to them. That happens any number of times until the story is good to go. And they're out to the publisher. Once it's the editor gets out to the publisher once it's passed all the editing at the editor's desk, and the publisher has to publish it, and the marketers or distributors have to distribute it. So by the time it gets to you, it's passed through like 4, 5, 6, 7, 8, 9 layers back and forth, right? And you can say, well, what about live TV? That's live. Even live TV has a delay, right, to bleep out anything you need to censor, right? So even if you're watching like live cable news or TV news or whatever, there's sometimes 2-second delay, 5-second delay, 15-second delay, depends on the channel. And even that, again, is going through multiple layers of QA and everything else, so that if they need to, they can black out the screen temporarily, which happens all the time. If you haven't noticed, when you watch live events, there'll always be some minor technical hiccups at just the right moment or just the wrong moment. If you haven't noticed that, that's quite a common thing that happens. So anyway, my point is, in all of this, right, the news is a lagging event indicator, and that's why you really shouldn't rely on it, because it's not going to help you in that. I mean, hey, if you're the 1 in 10,000 people that it actually helps on a consistent basis, knock yourself out. But statistically, it doesn't help most traders, and it probably won't help you, especially if you're not already consistently profitable trading in that way. You're not going to suddenly wake up tomorrow and then all of a sudden it's going to work for you. All right, what matters is risk management, taking your profits early and often, limiting your loss, and don't be emotionally attached to your trades. Nothing else really matters in the world of trading. You can try to complicate it all you want, but that's what it takes. You do that, you'll be consistently profitable. All right, and yes, the VEPS tools and methods can help you do that. But honestly, like, even if you didn't have the VEPS tools, if that's all you did, just enter a trade, and when you're profitable, get out, and just do that consistently. And enter a trade when you're not profitable, get out, and make sure that you're winning most of your trades. And don't be emotionally attached to any of them. Even without any tools, you'd still be better off than we're using traditional TA and all that voodoo patterns, and oh, this works 100% of the time, 60% of the time. Yeah, those are not good statistics. This always works 70% of the time. Yeah, what about the other 30%? That's not very good. So you want tools that just work. Like our tools don't work 70% of the time. Our tools always work. The question is whether or not you're taking the right decision to make the trade work for you. But our calculators work. Period. End of story. People ask sometimes, what time frame is best to use? Doesn't matter what time frame. What asset is best on? Doesn't matter what asset. All our calculators work on all assets, on all asset classes, on all markets, all of the time, on any time frame. Because they're calculators. They're good, solid calculators built on relevant maths that actually run the markets. And they show you the probabilities. Right? So, anyway, so the question of the thumbnail or the video title, crypto, Bitcoin, and alts, is there going to be a boom, or is it going to be, I don't know if I put the second part in, but like, are we going to go to the moon soon, or are we going to go to the doom soon? Is it moon soon or doom soon? Which one is going to be soon? Or either or not, or neither? The answer is As a low time frame trader, it doesn't matter. In the bigger picture, it also kind of doesn't matter. I'll tell you why. Okay. Look, if you're holding this stuff since only a very short time and you're brand new to this market, yes, it may be scary and all that, especially if you're new to investing. If you're a long-term investor, right, the probability is if you're in this thing for another 5 years or 10 years, or maybe even just 4 years, you're probably going to be very profitable with this at some point in the next 4 to 10 years. So if you've invested some money that you can afford to lose, because you should never invest anything you can't afford to lose. If you've invested money that you can afford to lose, and you don't care about it, just sit back, forget you even own this shit. Put a reminder in your calendar and on your watch and on your smartphone and on whatever else, or whatever other device you use to remind you of things. Put a reminder to look at the price in another 4 years. See how it's going. Just forget about it. If you're doing just a one-time investment thing, if you're doing the DCA, let your DCA run. Right? Let your DCA run however often you have it running. If you're doing daily buys, if you're doing bi-weekly, if you're doing weekly, if you're doing bi-monthly or monthly, if you're doing quarterly or semi-annually or yearly, whatever you're doing, right? Get that set up automatically so that you're not wasting time managing that, because that is a bunch of hogwash. It's not going to help you if you're constantly looking at the charts and you're really just an investor, right? If you're an investor, you shouldn't be looking at the charts all the time. You should be looking strictly at the overall performance of your portfolio every period, right? That's the difference between investing and trading. Trading, you're actively looking at charts and numbers and all that stuff. Yes, our tools and methods can still help you with long-term investing, but investments in general tend to be much higher time frames. So yes, you have to look at the information that's useful, like to know the volatility, the general tendencies of the volatility going in the longer term. But overall, you don't need to worry about the intraday stuff. You're investing, you're DCAing, or you made a one-time investment, it doesn't matter either way. Let that system run on autopilot for you. And just make sure you keep an eye on your portfolio once in a while, according to whatever your financial planner or financial advisor has told you to do. Right? When it comes to trading, that's a whole different ball of wax. And short term, low time frame trades give you a huge amount of occurrences of opportunity compared to higher time frames, right? Therefore, price is moot. It does not matter, which way the market is going. It really doesn't. And in fact, if anything, you should love it when the prices go down, because then you get to enjoy buying more of the same asset for less money, and you get to enjoy more gains when it goes higher. And if it drops further, you get to enjoy, nice profits on the shorts too. So that's how it goes. All right. I'll talk to you guys later. Happy trading. Peace.